Rates were in neutral last week around the holiday, and they'll start this week about where they started last week. So what happened last week? Well, federal holidays mean closed markets, and since Wall Street activity is the main driver of rates, we tend to see either very volatile weeks or very calm weeks when there are federal holidays. Last week just happened to be one of the calm ones. That was actually a good thing. The actual data released all week last week was all over the board. Some of it was a little bit higher, some of it was a little bit lower. None of it was significantly off projections though, so we saw a little rate increase, followed by a little rate decrease, and we finished the week about where we started. What about this week? It's extremely quiet for data this week. There is nothing significant coming out. In fact, the only thing we are really paying attention to at all is coming out on Wednesday, and that's the release of the Federal Reserve's May meeting minutes. That's kind of hard to say. That's why I said it so slow. So in those minutes, Wall Street will be able to examine nuances of who's thinking what, and they may be able to get ahead of where the markets are going based on what they think the Fed is going to do. So where are the current rates today? Well, according to Mortgage News Daily, the 30-year fixed rate is around 6.75%. The 15-year is just under the 6% mark at 5.98%, and the FHA is at 6.27%. Can you believe that summer is halfway over? Most of our school systems are starting in the next week, in the first week or two of August. And so we're basically at the midway point right now. That means home buying season is in full swing. And if you're thinking about selling, you need to get to market fast. A lot of people want to buy before it's time to register your kids for school, and that's going to happen at the beginning of August. If you have any more questions, call us. We'd love to chat with you at Weber Mortgage. We're a family in the business of helping families.